Look at this. This is a quarter. A simple, beat-up American coin. In the 1960s, 5 of these, $1.25, was the minimum wage for an entire hour of hard labor. It sounds almost cartoonish now, doesn't it? Working a full hour for a $1.25. But look closer. Scratch the surface. These aren't the copper-nickel sandwiches we use today. These are silver. And that tiny detail changes everything. Because if you take the silver content of those 5 coins and price them in today's reality, that $1.25 isn't worth $1.25. It's worth $70. Let that sink in. The modern, metal-based equivalent of that 1960s minimum wage isn't a few coins in your pocket. It is $70 an hour. So, why does your screen tell you silver is crashing? Why do you see headlines screaming about a silver ban and a price collapse? You are being lied to. What you are witnessing right now, the violent volatility, the sudden drops, the panic, is not a market correction. It is a crime scene. It is a calculated, desperate attempt to shake you out of the only asset that has survived the death of every empire in history. Rome in 284 AD, Spain in the 1600s, the Netherlands in 1815, Britain in 1931. Every single one of them saw the price of gold and silver roughly triple just a few years before their entire economic system reset. And it just happened again. Silver tripled. The signal was fired. And now, right on cue, the system is trying to crush the price. They are crashing it on paper so they can steal it from you in physical reality. They are inducing a flash crash because they know what comes next. They know the debt is unpayable. They know the currency is dying. And most importantly, they know they have nothing left in the vaults. If you sell now, you aren't just losing money. You are handing over your life raft to the very people who poked the hole in the ship. We are documenting the greatest wealth transfer in human history in real time. The mainstream media will tell you to panic. We will tell you the truth. If you want to survive the reset and understand the game being played against you, you need to be here. Click subscribe and turn on notifications right now. Do not let them control the narrative. Join us, and let's follow the money. Let's strip away the noise. Today is the kind of day where charts look like heart monitors of a dying patient. Headlines are using words like surge, collapse, and ban in the same breath. You look at your phone, and you see silver diving under $70, maybe heading towards $60. Your stomach drops. The instinct is to sell, to stop the bleeding, to get out before it hits zero. That is exactly what they want you to feel. That is the trap. You have to understand the difference between the price and the value. The price you see flashing on your screen is a lie. It is paper silver. It is a leveraged contract, a digital promise, a synthetic derivative that exists only on a server. It can be printed, shorted, and manipulated into infinity. But then there is physical silver, the metal, the stuff that you can hold, that conducts electricity, that is needed for every missile, solar panel, and AI server being built today. When a silver ban is rumored or begins, the market doesn't react politely. It snaps. The paper market, the casino, panics. Traders on margin get a call from their brokers telling them to put up more cash or get liquidated. They don't sell because they hate silver. They sell because they are forced to. It's a liquidity event. It's a flash crash. But look at the physical market. While the price on the screen is collapsing, try to buy a monster box of Silver Eagles. Try to secure a 1,000-ounce bar for industrial delivery. The premiums are skyrocketing. The dealers are holding back inventory. The supply lines are freezing. This is the great divergence. The price is crashing because the leverage is being flushed out, but the value is skyrocketing because the metal is disappearing. Think about the absurdity of this. We are in a world where the demand for silver is at an all-time high. The green energy transition creates a permanent deficit. The AI revolution is built on hardware that requires silver. And yet, the price drops? This is not supply and demand. This is a rigged game of musical chairs. The paper market is claiming there are 1 million chairs. The physical market knows there are only 5. And the music is about to stop. When you see the price collapse, do not see it as a failure of silver. See it as a clearance sale for the elites. They are shaking the tree to see which weak hands fall out so they can scoop up the real assets at a discount. They are crashing the price to buy it all because they know the paper contracts they sold you are worthless. To understand why this manipulation is happening now, we have to zoom out. We have to look at the macro picture that terrifies the central planners. The financial system is built to seem complex, designed to make you feel stupid so you trust the experts. But in reality, it is terrifyingly simple. It all comes down to debt. Since the 1980s, the total debt in the U.S. financial system has grown from 160% of GDP to over 400% today. The banking system has loaned out so much money, money that didn't exist, that the debt is now 4 times the size of the entire economy. And here is the secret they don't want you to know. It can never be repaid. In 2008, we had a crisis. The world almost ended. Back then, the debt was mostly owned by households, regular people like you and me. But since 2008, that debt didn't vanish. It was transferred. The U.S. government absorbed it. They printed trillions to bail out the banks and the homeowners, moving the liability from the private sector to the public balance sheet. The U.S. debt to GDP ratio went from 50% before the crisis to 124% today. This is the endgame math. Unlike a person, a government cannot go bankrupt in its own currency. They have a magic printer. When the bill comes due, they print more. Investors, the smart money, the central banks of the East, they understand this. They know that the only way out for the U.S. is to default on its debt or to default on the value of its currency. They have chosen the latter. They will print the dollar into oblivion to pay the nominal debts. This is why gold and silver have been rising for the last 2 decades alongside the debt. It is a barometer of fear. It is the only honest scoreboard left. But wait, you might ask. If they are printing trillions, why isn't bread $50 a loaf? Why isn't hyperinflation here yet? This is the piece of the puzzle that keeps people asleep. It's called the velocity of money. Right now, the velocity of money, how fast a dollar changes hands, is at historic lows. The money has been printed, yes, but it is trapped. It is stuck in the financial system, inflating the stock market, the bond market, and the magnificent 7 tech stocks. It is walled off from the real economy. But history shows us that this dam eventually breaks. When confidence is lost, when the people realize the emperor has no clothes, the money starts to move. It flees financial assets and rushes into real assets. It rushes into food, energy, land, and precious metals. Rome saw it. Britain saw it. We are seeing the setup right now. The rapid rise in silver prices earlier this year was the tremor before the earthquake. The current crash? That's the water receding from the beach before the tsunami hits. So, how do they stop the dam from breaking? How do they keep you in the dollar and out of silver? They weaponize volatility. Let's talk about the ban. You hear silver ban, and you think supply shortage, right? You think price up. But the market is a perverse mechanism. When a ban is whispered, or when export restrictions are hinted at, the first thing that happens is fear. Traders who are long silver using leverage, borrowed money, get scared. Brokers raise margin requirements. Suddenly, to hold a silver position, you need double the cash you needed yesterday. Most speculators don't have it. So what do? They sell. They are forced to sell. This creates a cascade. One sell order triggers a price drop. That price drop triggers someone else's stop loss. That triggers more margin calls. It is a domino effect of forced liquidation. The price collapses not because the metal is worthless, but because the paper structure built on top of it is fragile. And look at the bank bailouts. Have you noticed the headlines about emergency liquidity and repo markets surging? They tell you it's just plumbing. They tell you it's technical. It is a lie. When the repo market spikes, it means the banks are running out of cash. It means the collateral, the U.S. Treasury bonds, are being rejected or devalued. The system is seizing up. When liquidity tightens, the banks pull back. They cut credit lines. This forces hedge funds and speculators to dump their most liquid assets to raise cash. And what is the most liquid asset that has had a massive run-up recently? Silver. Silver is the ATM of the financial world. When the big players get a margin call on their bad tech bets or their collapsing commercial real estate portfolios, they smash the sell button on silver to cover their losses. This is why you see the price plummeting while the fundamental reasons to own it have never been stronger. It is a liquidity flush. They are using your fear to cover their insolvency. They are crashing the price of the only real money to prop up the value of their fake money. And while you are staring at the red chart, paralyzed by fear, the physical vaults are being drained. The Shanghai Gold Exchange is emptying. The COMEX is bleeding ounces. India is importing silver like there is no tomorrow. Do you think they are selling? No. They are buying the dip that you are creating by panicking. Let's talk about what they are terrified you will figure out. Silver is not just a trade. It is not just a pet rock. It is the lifeblood of the modern world. You cannot have an energy transition without silver. Solar panels are literally silver paste printed on glass. You cannot have an electric vehicle revolution without silver. You cannot have the AI boom without silver. Artificial intelligence requires massive data centers. High-performance computing. Efficiency is everything. Silver is the most conductive metal on the periodic table. It is not a choice. It is a law of physics. If you want the fastest chips and the most efficient power transmission, you need silver. Industrial demand is stripping the market bare. For years, we have been in a structural deficit. We are consuming more silver than we mine. We are eating into the above-ground stockpiles. And this is where the title of this video comes from. They have nothing. The paper markets, the COMEX in New York, the LBMA in London, trade hundreds of times more silver than actually exists in their vaults. It is a fractional reserve scam on steroids. They sell you a contract that says you own silver, but if everyone stood for delivery, if everyone asked for their metal at the same time, the system would implode instantly. The ban narrative is a sign that the physical shortage is becoming critical. Nations are starting to realize that silver is a strategic metal. It is as important as oil. If you run out of silver, your missile guidance systems don't work. Your satellites don't work. Your economy stops. So, when exports are restricted, it's not bearish. It is the most bullish signal imaginable. It means the metal is too valuable to let go. The crash you are seeing is the friction between the lie and the truth. The lie, the paper price, is crashing because of leverage. The truth, the physical scarcity, is tightening. We are approaching a break price, a moment where the paper price becomes irrelevant, where you can see silver at $20 on your screen, but you cannot buy an ounce of real metal for less than $100. That is the day the system resets. That is the day the paper market defaults. And if you sold your position because you were scared of a chart, you will be left holding worthless fiat currency while the real wealth moves out of reach forever. So what do? The system is screaming at you to sell. The volatility is designed to break you psychologically. It is designed to make you feel foolish for holding a barbarous relic. But remember the math. Remember the $1.25 that is now $70. Remember Rome. Remember the debt that can never be paid. This is not a time to be a trader. Traders get slaughtered in flash crashes. Traders get wiped out by margin calls. This is a time to be an owner. Volatility is not a thesis breaker. It is a structural revealer. It is showing you that the system is broken. The violence of the price move is proof that they are losing control. Do not confuse the price with the value. Do not let them shake you out. If you hold physical silver, you don't have margin calls. You don't have counterparty risk. You hold the one asset that has no liability attached to it. They are crashing the price to buy it all. They want your silver. They want to close their short positions using your panic. Don't give it to them. The reset is coming. The debt bomb is ticking. And when the dust settles, the only thing that will matter is who holds the paper promises and who holds the metal. Stay strong. Stay solvent. And do not sell. If you want to stay ahead of the curve and know exactly when the next major move is coming, make sure you are subscribed to the channel. We are tracking the physical flows that the mainstream media ignores. Click the video on your screen now to see the one chart that proves the banks are lying about their reserves. I'll see you there.